All right, next video. Let's get into the charts to start charting out the Fibonacci retracements. Let's kill out of that. Let's get to the black. Blah. We got XRP trying to do something. It's not gonna do anything. We're gonna let it rise. I should have got in this trade, but it's Christmas Eve. I'm not. I wasn't trying to deal with anything. That would have put me up to 2,000. Hold on. Yep, that would have put me up to 2,000. But that's cool. This is a dead market. Let me see something. Just 1 minute. He got a long way to go. Yep. Got some ways to go. But let me get to the fib tutorial, or whatever you want to call it. Let's go to alright, so now when dealing with fibs, I'm gonna find some good examples so you guys can understand this. Alright, so this is a downtrend. Clearly we see it as a downtrend, right? Lower lows, lower low, lower low, lower low, lower high, lower high, lower high. So now we're dealing with Fibonacci. Let's pull it up. So what you do is you go here where you see the lines. Maybe it's something different on yours, because whatever it's defaulted to, you'll find the Fibonacci retracement. That's the 4 lines. When you select that, double click it to get into the settings, and this is how I set mine. I take off the trend line. Usually it comes with like a trend line going across the middle like that. I take that off. I don't need it. I usually sometimes I thicken the level, but you don't need to do that. I'm a little blind sometimes. But make sure you have the 0.236, the 0.382, the 0.5, the 0.618, the 0.786, and the 1. Make sure these are there, and make sure on the bottom you have the negative 0.618 and the negative 0.27. I'll get into them later, but make sure you have these levels. Pause the video so you can get these down pat. Right? There you go. Alright, so now you can lay everything out how you want it. This is how I lay everything out. You can copy exactly what you see on the screen. But let's get down to how to use this. Okay, so seeing that this is a downtrend, our thing is we want to keep within that trend. Let's say if it feels like this, right? So we see that this is an uptrend. Boom, 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 boom. Right? So now, like I said previously, impulse. This is an impulse. You can clearly see this is a push up move. this is a retracement. This is called the retracement. So we could just use this example. This is a pretty good example. But this is considered the retracement. The retracement it will retrace and it'll find a spot where it actually stops. So what you need to find is, after the impulse, you need to find a spot where it started rejecting and going the opposite direction. As you can see here, you see all of these wicks. That means that it's being rejected. So this zone up here, this nice resistance zone right up here, is a strong zone. So as you can see, even right here, it's been a tough zone. It's been a tough zone throughout the entire chart. So after this got rejected, it pushed down. So what that's going to tell me is, I already know it's an uptrend, or it's an uptrend within the 15-minute, because it might be a different trend within the higher time frame. It's an uptrend within the 15-minute because I see this, it crossed here and it crossed the previous zone that was a tough zone. This was a consolidation zone. So it crossed it and it pushed all the way up, and when it came down, it gave you a solid push down. So my thought process is, okay, well, there's a rejection here and there's a push down. So I'm going to draw the fib from the start of the impulse move. So this doji wouldn't be considered the start. This is actually the reversal part. I'll start it like right here. For uptrends, we start from the bottom to the top. For downtrends, we start from the top to the bottom. So, and I'll go all the way to where it initially got rejected. Now, what I see is the 38.20% Fibonacci zone met. So now what I need is a candlestick pattern to show rejection. We already see some kind of rejection here because the wick, it shows basically that something pushed it up. And if you go down to the lower time frame, you see there's a wick here and a wick here too. So what we're seeing is it went up. Now our bias is that this is an uptrend. It can still be considered, overall it's considered a downtrend, but this looks like a reversal pattern because this from here to here, this retraced all the way up almost 100%. But from here to here to down here, 38% retracement of this impulse. This is 38% of this impulse. And so now what we're looking for is an entry to go up, right? To at least this 0% mark. So what we're going to do is we're going to play it. So now you see a green bar is formed. So this is a buy in, a bullish bar is formed from after this actual push down. So that's a signal. Now we could have entered after this. We could have went down to a lower time frame. And after we saw this candlestick, we could have entered because that's a break of structure. As you can see, it went down, shot up. It got rejected from up here, shot down, rejected. But this actually crossed this whole thing here. And that itself, once this formed, you could take a buy. So now, after that, remember, this is how you trade the Fibonacci. From the 38%, after that, we just wait to see what it does. Our target is the 0%. So right now we're already in the money. We good. We won't have to worry about anything else. But because we understand what's going on here, and this is a support zone or resistance zone, and this is actual a downtrend, we want to be careful holding the actual trade. If it crossed over the 0% and it retested, we can go for the negative 27%. So, which I'm gonna get into those two later. So I'm just showing you the entries. So let's do another one. This is another buy, a buy one, right? Boom. See how this is a push up, an impulse. It went down to retrace 50% of the actual impulse. It shot up. Boom. Even this, remember what I told you, the 78%, it started wavering. I don't trade the 78% one. It started wavering. And it didn't cross all the way initially. Right? So now this, we have a downtrend one. From the top, impulse, retracement. So impulse, rejection, retracement, and on the retracement, wherever we see a reaction, this is a reaction, a doji, and a candlestick below the previous candlestick. So it broke that doji, and that was a signal that is gonna the trend was gonna continue. I want you guys to keep practicing this, because this is a very useful way to enter trades. See how this is a stair going up? It can always be drawn. The Fibonacci can always tell you what's going on. 50%. 50%. See, 50%. Could get in there for a buy. See, this is what I do. This is what I do. This is how I scalp. So I will do this. What I do is I would wait for this to do its thing. So let me do this. I'll see this. I'll wait for it to do its thing. Right when I see this, I'm already looking to wait to see a rejection point to draw my fib. So now, me seeing this as a rejection point, which correlates with that zone, which is also a support resistance zone, as you can see. So I'm like, okay, cool. That's a rejection point. Let me draw my fib. So I'll go ahead, draw my fib. I just wait to see which one of these. My first thought process is a 38%. But if it crosses, then I'm waiting for the 50. If it crosses, I'm waiting for the 61. If it crosses 61, I'm not taking a trade. I'm just, waiting to see what it does, because it might do like a consolidation. But what I'll do is I'll wait for it. So right now what I see is like a doji. So I see confusion in the market. I see confusion in the sell, right? So what I'm waiting for is for a candlestick close above the doji, and then another small candlestick to form in order for me to take the buy. So now I have the confirmation right here. Y'all take these notes down as entry notes, right? So the doji candlestick closed above the doji, and another candlestick closed above that. That's confirmation that it's going up. My next target is the 0% zone, and we could take profit. See how simple that is? So now this is a Fibonacci slash entry video, because I'm basically giving you a crash course on entries. Now this is like a bigger, more, you can use it for more collective trends. Like you can see this impulse, even though this is consolidating, it's still consolidating within this downtrend. So it's still considered it's still considered an impulse going up. As you can see, boom, boom, boom. It's still considered a downtrend. It's still considered an impulse going up. Doesn't matter if it's consolidating. So this will be my inclination, and what we'll do once I see it. See, this is the thing. This is where people will mess up at, right? So let's follow our rules with the fib, right? We follow the impulse and wait for a rejection. This is the point of rejection. This can also be the point of rejection, as this looks like the actual resistance. So I'll draw this as the point of the actual rejection, and now I'm going to wait to see if I can find. See, right now I don't know it's consolidating until I just wait to see if I can find one of these zones touched. Now from it doing that, now I know it's consolidating. So now my thought process is, what? I ain't mean to do that. So now my thought, whoa. Alright, so now my thought process is, it got to break down here for me to even take the trade, because that's how I trade breakouts and consolidations and ranges. I don't trade within the range, because I learned the hard way that's how you lose money. You'll be seesawing back and forth. So to me, this is considered a 38% hit. I probably would take the trade based on what I see on a higher time frame. Nope. Nothing would get me to that point of taking the trade. The only thing that I would consider is this doji. And once this bearish engulfing strikes down, I'm ready to strike to take that trade. So aggressive traders take the trade. You'll take the trade up here. Conservative traders will take the trade down here. And then it breaks. Once it broke, we all good. We all in the money. So even if there's a consolidation period, a range period within the fib, that's still fine. It's still set to hit a zone within that fib in order to show you and confirm that the retracement is over with, is done, and it's ready to continue the trend. It's the same thing that happened here. Same exact thing happened here. It still did its thing. 38%, almost 50%. See, I don't draw from all the way down here. You can, but I'm kind of picky with how I draw my charts. So I don't draw from all the way. I'll draw where I see the start of the move. And this was actually a 78. And you see how after it crossed the zero, it came back into the zero. So that trend was going to die, but it continued. You see another one right here. You could do all the way. If you started from the bottom, that's how you're looking. You started from the actual start of the trend, that's how you're looking. But from the impulse, the actual impulse based on a higher time chart, see, that's based on a higher time chart. That's how you're looking. So this is how to enter the Fibonacci. Use the Fibonacci as retracements. You have to wait for the move first. Don't try to predict moves. Don't try to do any of that. Wait for it to shoot. If you could wait for it to shoot whatever direction from a breakout, and you wait for that retracement, you can measure the retracement and get your entry on. Let's do another one. See this? A nice impulse. See, like, if this shot down like this, some people would get down here thinking that it's going to keep shooting down. But we're waiting for it to retrace. This was almost a 61. They're not always going to be perfect. So that's one thing. Another one right here. And even on higher time frames. Higher time frames, the Fibonacci is beautiful on higher time frames because it'll basically let you know how powerful the trend is. I took this right here, I took this trade and I caught this all the way down. Even though I don't trade, like I ignored the whole 78 thing. Because I saw this is actually where it kept rejecting. I didn't even take a look at that. I didn't care about that because I saw this is where it was rejecting. And I saw this, it was a nice 61. If I see something like this, either it's gonna retest and go up, which we can draw a retracement from the bottom up, 50%, or it can do like a double top and shoot down. So that was my thing. I was just waiting for it to do one of those. I'm not putting in my trade yet. Now, when I saw that, I noticed this was like a double top. 1, 2, around the same zone. So my whole thing is, if this can close like this and another one close down, we're in the money. Not only that, I can box this in and wait for it to cross the neckline, and I could take it all the way down, and boom, just like that, it crossed the neckline. I can take it all the way down to the 0, and boom, it hit the 0. So it was that simple, and it was all on Fibonacci, all on Fibonacci. The higher time frames will be more solidified. That's why a lot of times I'll trade higher time frame. If I'm scalping, if I want to make like $1,000, $500, $1,000 within a day or two, I'll scalp the whole Fibonacci. I have a Fibonacci set to go a specific direction, the chart to go a different direction, but within it, I'm scalping the 5-minute and 10-minute. Like this. Like this Fibonacci, I would know that's going down, right? I would know that's going down, but within it, I'm scalping. I'm putting in multiple trades. That's just that, and that's the intro to Fibonacci's and the entries with Fibonacci's. It's very simple. You're gonna see me using it a lot on other videos. There's like a workflow video that I have that's like an hour long, that'll kind of take you through the process of using it throughout one specific trend to get continuous wins and make things happen continuously. But besides that, that's about it for now for Fibonacci retracements. Let me get to the negative points of the Fibonacci and what they would mean for you.